welcome to the Market Alert for Thursday, the 4th of July 2019. Now, I know I wasn't going to record today, but after yesterday's sleight of hand and the market going up to the all-time high, I thought I would continue as the market now has hit the October high. Let's see how it pans out during the overnight market today and then back to normal tomorrow. So the reason behind the move apparently is defensive stock surge ahead of payrolls as entire treasury curve is now inverted, which is very interesting indeed. So let's take a look and see what happened during yesterday. So what I did yesterday was watch the markets in the morning and then came back before the start. In the morning we saw the market moving higher, prices above the 200 bar moving average and above both of the averages at this point as well. So starting to move strongly in the pre-market session. We then saw prices consolidate a bit as we moved through the morning. Coming back, just moved past those and looking at other markets, and then we see prices here sideways, and then we get into the main event and you can see the volatility increasing here. The price is sideways, battle going on, poor economic news, and then eventually they seize the opportunity and start to move higher. You'll see a bit of a pullback here to the 20 bar moving average, prices close back above it, and then off we go. And then this is when the market got close to the all-time high. You can see there prices trading up. I'm just going to bring this back to around about here because there's a lot of data in here. Then you'll see at this point, I can just find there we go. What I was doing was marking up the all-time high. This is in the weekly chart. You can see this here. I just wanted to see how it was going to fare at this level, and then as we move through, again there's a lot of data in here and it's always difficult just to find the piece that you want. We can see here now the market's at its all-time high. This is the bit I'm after. So I'll come back and check the daily, having checked the weekly. Pick the wrong point to begin with. This is the point that I want. October highs, and then you'll see the market is through this. I'll just tidy the chart up, make it a bit clearer, and there you see the market taking out the all-time highs. I suppose the question is really, is the market going to be able to hold at this level, given that they are waiting for the Fed's decision on cutting rates, which is going to be this next Wednesday, the 10th of July. So all eyes will be focused on the market certainly this next week. We've got the non-farm payroll figures as well out on Friday, tomorrow as well at 1:30. So keep an eye on those as well. But very interesting developments here going forward. So the Dow taking advantage of the half-day session. That's all you had yesterday. You can see the market there finishing on the high. So let's have a look, see where we are on the overnight. So overnight, the market opened higher again, put in another new all-time high, which we can see here, and then prices have been sideways to lower. The question is, will there be some follow-through on the electronic system today? It is an official holiday today in the US, obviously Independence Day. The cash market will be closed, but the electronic market will continue to trade. So overnight, prices have put in this new high. Let's just add this in just to keep an eye on things, and that's the new all-time high. We can remove this one, and let's see how the market plays out today. I should think it'd be fairly quietish. To make a move all the way back down would be rare on an electronic market, but never say never. There's no news today. As you can see, there's the confirmation of the holiday. Meanwhile, in the implied volatility, an interesting picture here, because yesterday was 11:20 and we have 11:56 for yesterday, even though the market moved higher. And the reason for this is quite simple. Those in the know, just like ourselves really, are questioning whether a rate cut into a stock market that is at all-time highs is certainly unprecedented, and normally a reduction in interest rates is there to boost the markets in the event, or trying to avert some type of recession, or to help the economy to grow. But of course, all of that went out of the window in 2008. Now we've got QE, where it's a case of all of the money and the Fed taking over the stock market. So this is why the implied moved slightly higher. We could do with this dropping down to the 10% area and then watching as things start to unfold. Done a bit more on the charts now as well. We've got a 50 bar moving average in there as well, so you can see the effect of the implied versus the averages as well. There's a lot more to do yet, but it's certainly a fascinating subject, and also a predictor as well. So as I develop more of this, I will get it recorded, but certainly a lot of information available. And this is an important area now down here. We could do with, as I say, to a precursor is getting down to the sort of 10% level, more so than 12. Doesn't mean to say that we can't get a correction at this level, but the best corrections come when the market's down at the 10% area. Okay, so have a quick look at some of the markets. The pound not doing anything yesterday as well, but half-day sessions for all markets because the US was closed. Still on the downside, the market trading to the 76% to yesterday, but trading back above this on the overnight. And finally, Bitcoin. Look at the daily chart first. The market moving higher yesterday. A bit of a retracement going on in this market at the moment. And no doubt from here to here will take you to a 76% retracement. It is. So price is back below this. So still in a corrective phase at the moment. So you can see this in the 4 hour. We've got a bit of a bounce going on here. Price is off on the overnight. And then in the 15-minute for yesterday, we'll just drag this across. We had some selling to begin with. Then we see the buying coming into the market. We had prices moving lower once more, but once we were back above the 2 averages on the overnight, prices have managed to rally, and then at the moment are currently consolidating there. Okay, so yeah, lots going on. Let's see what happens today, and I will decide whether to record tomorrow, because there probably won't be a lot, but you never know. As yesterday, they seized the opportunity to drive the markets to the upside, and yeah, we're back to the all-time highs. As I kept saying in the market alert, they want the market higher, they want the market higher, they want the market higher, and that's exactly objective achieved. And yesterday in the article on Zero Hedge, there's a great chart here, and we've got all of the yields inverting as well, and fancy reducing rates when you've got an inverted yield curve as well. I mean, it just goes to show you how bad things are. This is an interesting chart as well. This is showing the decoupling of the 10-year yield, which you'll see here from the S&P. And this is my next project, to actually put this together in Excel as well, and found where I can get the data from, just so that we can see this. But this is a decoupling. This is not normal either, so that's going on in the background. We've got Treasury yields slipped further on the day, except 2-year was unchanged. 10-year yield hits high at 193 handle overnight. 20 and 30s erased all the steepening of the curve. We've got a few more there. This is an interesting as well, and perhaps the most note, 30 yield are now below the Fed funds rate, meaning entire UST curve is now inverted, and you'll see here that when this happened in the past, again, we've got recessions following, except for 1986. That was it's not 100% like the 3-month to 10-year. Sorry, the 2-year, 10-year, I think, is the one that we log mainly. Get confused with all of these. Yeah, so it says the only false signal, 1986. Yeah, it's the where are we? And then there was one more that I wanted to show you. You can never find them when you want them, so let's go back up a bit. And it was to do with the S&P and the VIX, and it will turn up in a minute. Like I say, this page is always a good roundup. Here you go. This is the one I was after. Every effort was made to ramp the S&P to 3,000 as the VIX was monkey hammered back to a 12 handle. And remember that over the last few years, the Fed have been very active in selling the VIX to the downside to force the markets higher. And that started in 2012, which can be seen very clearly in some of the charts that I have, which I will add into the volatility studies. So when you start piecing all of the bits together, it all becomes very clear what's going on. You've got the rhetoric and everything else to try and keep the markets afloat, but ultimately underneath it's looking pretty poorly, without a doubt. Okay, that will do it for this one. Let's see what happens today. As ever, thanks for watching. See you in the next one.